In 2011, Rwanda took a deliberate step, not simply to open a stock exchange, but to build a system where national ambition could be financed at home.
There are 15 years as RSE from the start of our operations, officially as a fully fledged stock exchange. But in a sense, actually, the company itself to create the stock exchange was registered in the books or the registrar of companies in Rwanda in 2005. So basically, it's 20 years of existence of the company.
Capital markets are not abstract institutions. They are tools. Tools that turn savings into factories, roads, schools, and hospitals. For Rwanda, the exchange was about ownership, giving citizens, institutions, and businesses a stake in national growth.
It was all a natural progression, a sequence of reforms in the financial sector since this government took office. So, first things coming first. The first thing you have to secure is macroeconomic stabilization, because that is the basis of everything. But then you have to go from the macro stabilization, you have to go to the micro foundations of the stability. And one of the most important things you can do is strengthening, diversifying the financial sector. And from the early years, it was first of all stabilizing the banking sector, the non-banking sector, and then the rest of the financial sector, insurance companies, institutional investors, stuff like that. And so development of the capital markets, of which the stock market is one, was a natural progression of that march. And I suspect that there is still a lot of things to be done to deepen the financial sector. All right? You simply don't put in place. Yes, the laws are in place. There have some baby steps have been taken. But now deepening that sector is what has happened. And I salute to the work which has been done so far.
The early years were about trust, building rules, building confidence, building participation. As listings grew, so did belief in the system. A turning point came with the introduction of government bonds. For the first time, long-term national development could be financed by domestic investors, not short-term borrowing, but patient capital. Even during global uncertainty, the market adapted. Longer-term bonds, broader participation, a deeper financial ecosystem.
As a partner to Rwanda Stock Exchange, what is important for a country to be able to even attract investors in a stock exchange is stable macroeconomic contexts. Macroeconomic stability is one of our mandate, but also a commitment to make sure that at all times Rwanda has a low and stable inflation. It's building that foundation for a sound financial system as a whole. Secondly, we've been also part of the development of the capital market itself. And if we look at the bond market, the central bank is the issuer of government bonds. And since 2014, we've had a predictable and structured issuance program for government bonds. And today we have close to 2 trillion Rwandan franc of issued bonds on the market.
We started with a few companies. Two listings when we were launching the market officially, because we had some cross listings from the region, 2 of them, I believe, and a few bonds. But now we have grown up to a market capitalization of around $4.6 billion, of which about $3.3 billion is equities, that is the shares of the companies listed, and 1.3 again is the fixed income that is listed on the market. So if you look at the money raised so far since inception in 2011, like that, goes around $1.8 billion, which makes it around 13% of GDP, of the current gross domestic product. But between that and the money traded, the now money circulated in the secondary market, if you add all that up, it sums it to around $20 billion. So that makes it around 42% of GDP, on the money that has circulated in the market.
Markets succeed when they serve the real economy. Through initiatives like the investment clinic, small and medium enterprises gained access to capital, not just loans, but opportunity.
So in 2008, actually, when we were doing our first listing, we had the stock exchange registered, but not operational. We issued the first equity, the real one. That's how the stock exchange started. We started with a few listings, and later on we added some cross listings. But the journey from 2005 to 2011 required a lot in terms of preparations, in terms of agreements. But the best thing we had the support of the government.
We conducted something known in the business as a stress test. You stress test the financial sector. You assume a lot of possible, potential, negative worst case scenario. Yes, and then you figure out what would happen to your banking sector or the non-banking sector. And the lessons are quite interesting because they revealed to us where there were pressure points, right? And on the basis of the pressure points, there was then a sequence of things to be done. There was no point, for example, in putting in place a stock market in 1998 because we were working on the macro issues, the debt issues, both external and internal, all right? You are still working on stabilizing government finances. So there was a series of sequential efforts, but all aimed at diversifying the financial sector and deepening it.
First, aid is more political than anything else. Yes, let's not be diplomatic, let's not gloss over issues, let's not, markets are markets. We know what they have for us, outweighing what we have in aid by thousands of times, please. So why do we leave something here that we know is more important for us by any measure and account? And then we start saying, no, but let's not even make a comparison. You see, we need both, Okay, so I rest my case.
15 years on, the scale is clear. Market capitalizations stand at over 6.5 trillion Rwandan francs. Trillions more have moved through bonds, equities, and over-the-counter markets.
Through the Rwanda Stock Exchange. And what we've seen is also the appetite of investors for our bonds. One being institutional investors, which hold close to 60% of all government bonds, the banking sector, obviously, but also retail investors that are close to 10% of all investors.
This is where markets move from screens to lives. Innovation followed growth. Sustainability-linked bonds, green financing, stronger governance standards. Rwanda's capital market began aligning finance with the future. Today, participation defines the market. Tens of thousands of Rwandans now hold investment accounts.
Back then, I joined the industry, of course, as a staff. I used to work with one of local brokerage firms since 2011. And that's when we came to know or to learn about the capital markets, how it operates, especially in the brokerage businesses. There was a new industry in Rwanda. No Rwandan knew about how the capital markets work. So the companies we used to work for, they came from the region just to help us set up the capital markets. That was the journey. Of course, I did different roles, but especially in the trading area of stocks. 2017, I just wanted to do a brokerage firm. Then the someone I wanted to partner with, it didn't work out, so I had to stop. But the passion of the industry was still there. I think 2019, then that's when I applied for my own license to provide the same services. So throughout those years, I had acquired knowledge, enough knowledge at least to do the business, to explain the capital market concept to Rwandans. That's when in 2019, More Capital came out as a Rwandan-based company and owned by the Rwandan.
The next chapter is already forming. Deeper liquidity, new instruments, a broader investor base, and a generation ready to participate, not observe.
A strong equity culture enables wealth creation, builds resilience, and drives economic transformation. To realize the full potential of financial markets, our continent must have a world-class stock market and a market with a strong and sustainable potential to mobilize and allocate finance to key development projects across the continent that contribute strongly to improving the well-being of our people.
15 years in, the Rwanda Stock Exchange is no longer an experiment. It is infrastructure. It is trust. And it is a platform for what comes next.
I would be very, very happy in the next 15 years because I will not be there where I am sitting. The dream I would wish to see in the next 15 years, I would wish to see the market cap of Rwanda bigger than GDP. And it's possible. You know, the biggest component here is the buying of the Wananchi, the people of Rwanda, or our neighbors or friends of Rwanda. If anyone who needs money can get the money even from the capital market or wherever, but you know, the notion of creating an equity culture will remove all the debts we have.